Chapter 1, Starting a Proprietorship, Changes that Affect the Accounting Equation. Section 1.3, How Transactions Change Owner's Equity in an Accounting Equation. The value of a business is the owner's equity. The owner's equity is based on the flow of money into and out of a business, as the business makes money by selling products or services. Making money is called revenue. So when we have money in, that is revenue for the company. When companies or people buy things from a business, they don't always pay cash. Sometimes they buy things on account. This means that the business will send the products or perform the service and then get paid later. Instead of paying for lots of little expenses, a good customer can ask to get a bill for everything once a month. It's kind of like buying things on a credit card. Until the bill is paid, the business is owed the money, called sales on account. So, money going out is a liability canceled. When a business pays for a product or service, it is called an expense. Paying for an expense is a decrease of cash which reduces the value of the business and which comes from the owner's equity. The other way a business decreases its money is called a withdrawal or drawing out of equity when the business owner gets paid by the company. This is a decrease in the cash in the business accounts and it is paid to the owner, which decreases the owner's equity or how much the business owes the owner. With that said, let's take a look at the work together question. Under assets, we have cash, accounts receivable from Harman Company, which is money owed by the Harman Company to the business. The next asset is supplies, and the last asset is prepaid insurance. The liabilities come from the accounts payable to Corona Supplies, which is money the business owes to Corona Supplies. The last column is the owner's equity, or what the business owes to the owner. Transaction 1 is received cash from sale. On page 18 in the textbook, it shows getting $1,100. This increases the cash account, and as revenue, it increases the owner's equity. So we put a positive plus sign under the cash, and we put a plus sign on the right hand side under Brian Arnett Capital, the owner's equity. Transaction 2 is Transaction 2 is sold services on account to Harman Company. This is also on page 18. Selling on account means that the amount Harman Company owes increases and the owner's equity increases as well. So in the second column under accounts receivable, we put Harman Company, we put a plus sign, and under Brian Arnett Capital, we also put a plus sign. So the company is owed money, and that means the owner has more money as well. Transaction 3 is paying cash for a cell phone bill. This is on page 19 in the textbook. Paying cash decreases the amount of cash the business has and decreases the value of the business overall, which is shown as a decrease in the owner's equity. So we put a negative sign under cash and a negative sign under Brian Arnett Capital. Transaction 4 is received cash on account from the Harman Company. This is on page 20 in the textbook. The Harman Company sent over some cash to pay off their debt. The amount they owe is the accounts receivable, which is decreased because they don't owe the money anymore. This is offset in the asset side by increasing the cash the company has. It does not affect the owner's equity because that was increased already when the accounts receivable was recorded. So we put a plus sign under cash and a minus sign under accounts receivable from the Harman Company. Transaction 5 is an owner withdrawal. This is on page 20 in the textbook. The business pays the owner cash, which reduces the value of the cash the business has, as well as reducing the owner's equity as the business doesn't owe the company that money anymore. This is how the owner of a business gets paid. Often the owner of a new business doesn't get paid as the business starts selling its services or products. Once the business starts making money, it has more revenue per month than expenses. This means that at the end of the month, the more money that this means that at the end of the month it made more money than what it has to pay for mortgage, rent, supplies, paying employees, bills, etc. This extra revenue money can then be used to expand the business and or pay out to the owner. So in this case, we put a minus sign under cash and a minus sign under Brian Arnett Capital.